And now joining me for a look at the day's trade is Byron Lotter, who's Portfolio Manager at Vestact. Hi, Byron.
Thanks for having me.
We'll look at a bigger picture view, but let's start with Brait because we've just heard John Nodder talking about it. Their results out today. It's a quiet day, so they've had a lot of attention. What's your sense of the way he's talking about the company and where it's going?
It's a good set of results, but you'd have to say that's expected. This is a company that's made a massive shift. They've gone from a private equity firm to an investment holding firm. And when you look at an investment holding company, you've got to look at its underlying assets and whether you could possibly gain exposure to those assets through the market without having to absorb their fees. Unfortunately, the likes of Premier Food and Pepkor, you cannot get via the market. So if you wanted access to those specific companies, you'd have to buy into Brait. Looking at the comparative firms like Mr. Price and so on, we can see that the retail sector has done fantastically. So they've obviously trying to grasp this market, and you know, the timing of the acquisition of Pepkor was very good. I actually did some research recently about foreign ownership in the retailers, the South African retailers. Obviously, Massmart has over a 90% foreign ownership through Walmart, but when you look at Truworths, it's over 70%. Mr. Price is well north of 50%, and you can see that developed market investors are looking at countries like South Africa and trying to grasp our consumer, and that is exactly what Brait are doing. They're trying to focus on the South African consumer, which we believe is still very strong.
Of course, that the risk to those companies is if they go out of fashion with foreign investors, and that money can go out quite quickly.
I guess so. I mean, they must have done fantastically over the last 3 or 4 years when you have a look at what the retail sector has done. But of course, I hope they had a few rand hedges at the moment because, you know, that rand has really weakened a lot. But I think, you know, going forward, the long-term fundamentals are still very strong behind our consumer. I still think there's a long room to grow, and I still believe we're coming off quite a low base.
What about Europe? And we said earlier on the show that there have been a couple of events and they've not produced anything. The G7 were said to be talking in emergency discussions, and the ECB called on by the IMF to reduce interest rates by 1%. They haven't. What's your reading of that?
Yeah, I didn't expect much from the G7, to be honest. You know, most of the talk was about Spain, and Spain aren't even part of the G7, and we've had so many of these similar type meetings where there's been no substance. I really thought well, I didn't think the ECB were going to cut rates, but I think they should have. You know, they might have missed a bit of an opportunity. But I spoke to my colleague Sasha about it, and he mentioned maybe it's because they're waiting for the Greece election to come and a bit more certainty with regards to that, and it'll give them some ammunition in case things don't go as well as they expect there. But I would have liked them to have cut rates. Obviously, we can see a lot of green behind us, resources picking up nicely. I think a lot of talk is about the Fed, Ben Bernanke's talking tomorrow, and a possible QE3. But this is all short-term sentiment that has been really negative at the moment, and resources being very volatile to sentiment. I still think that they've been completely oversold, and there's still a lot of room for growth globally. Jim O'Neill, the Goldman Sachs head of asset management, came out with some very interesting stats in his monthly letter, and he said that China in 11.5 weeks create the equivalent of a Greece economy, and in a whole year they create the equivalent of Spain, and the BRIC nations together create the equivalent of Italy. Yeah. So I still think we're consuming the wrong media. We're watching Europeans who are having their wages cut and bonuses cut and so on, moaning about the economy, which is actually flat. It's not even falling at this stage.
Do we perhaps fall prey to watching the European and American market so closely because there's so much information coming out and it's the same language, so it's easier?
Exactly. That's the kind of media we consume. We don't watch Chinese news and what's happening there. You know, I've mentioned before, I watched a YouTube clip about they built a Chinese building, I think it was 20 stories in a matter of 2 days. You know, we don't see that kind of thing. So we possibly consuming the wrong media, and this creates great buying opportunities. You know, in that same letter, Jim O'Neill mentioned that this could be one of the best buying opportunities in a long, long time. And I honestly believe that. You know, companies are still very well positioned. Global growth is still looking strong, according to the IMF. So I think, yes, resources is definitely a great buying opportunity, and have been completely oversold, and it's great to see them picking up.
However, our economy is exposed to Europe. So Wayne McCurry in the studio has said that we must put our eyes on China because that's where the weight of our economy is going to be, and at least have some balance. But we are exposed to Europe in terms of demand, platinum exports for cars, manufacturing exports.
Yes, we are, and so is the Chinese economy exposed to Europe. But it's not like Europe is going to fall off the face of this earth. They're not going to experience fantastic growth, but they're still going to be there, and they're still going to be consuming, and they're still going to be fighting. I'm sure their resilience will be stronger than what people expect. And everything's very much interlinked. So the likes of Germany and France, they do have to cooperate at some stage. That's why I was a bit disappointed that they didn't cut rates today, because the ECB don't have as much politicking to do as what the specific governments will. But I do think that consensus will come in the long run, because no one wants to be remembered as the leaders of the European Union that ended up falling very hard.
Sounds like you think it's going to stay together, unlike some people who are betting that Greece will go and then others will. Spain, one hears so much about their banks, the interest, the servicing of their debt. The Spanish banks apparently doubles every week, or a statistic like that. They don't want to be bailed out. Apparently it's a pride thing, but they do want help. They've admitted that their banks are seizing up and they need help.
But we saw the similar situation with Greece, and eventually, they're going to have to admit that they need the help. And I think, this is slowly shifting towards something like a Eurobond. When it comes to Spain and Italy, these economies are a lot bigger, and big trading partners with the likes of Germany. So within Germany's own best interests, they're going to have to maybe, suck it up and consider a Eurobond. But there still is room for stimulus, and still room for further policies that will help the situation out. But again, like I said, I think we put on too much focus on Europe. I know it's a massive economy as a whole. It's $15 trillion, which is slightly smaller than the United States and twice as big as China. So it's a massive issue. But I think too much emphasis is put on it, not enough emphasis on what's happening in the developing markets and the shift to a big consumer spending that we're going to see from the developing markets.
Perhaps a welcome corrective there from Byron Lotter, Portfolio Manager at Vestact.